chasing the hunt, and I set the pace when I'm running. I always take what I want and I always give it 100. Don't need a bank, no I'm funded. Play the game like it's nothing. I'm always thankful for something. Don't take for granted, stay humble. Now wake up! It's time to look at the enemy. Look in the mirror if he is no friend to me. It's not working out, maybe it's the chemistry. It's time to break up so I can make a better me. Better believe in your mind, cause it's everything. You can mold, shape, find almost anything. All it takes is some time.
Hello everyone, welcome back to my YouTube channel. And so today I'm going to ask you this question: how do you actually know if this structure break you are looking at is not a liquidity grab? So by the end of the video, make sure you're able to understand structure break and you're able to understand liquidity grab. So I am giving this out for free, as most of you might have known. I know most of you can't afford, and my apology for actually not being live always, right? So liquidity grab is way different from structure break, as I explained in my previous video that I posted I think 3 days ago. I said liquidity cannot go without structure break, and structure break cannot go without liquidity break. What do you call it? Liquidity grab, right? So liquidity is basically sweeping people out of the market to gain more momentum, to get into what to get more volatility, to give us a trending or probably a volatile market. So as you can see, we have a very liquid liquidity that was created below this particular price structure. You see there was a breakout structure taking out liquidity and going back up, deceiving us that this is actually a change of character. Okay, so most of us were actually looking at buying from this particular point of interest, or this whole area. So let me just highlight this whole area was actually looked at for as a buy opportunity to go back to the upside. But what ended up happening was that price just kind of tapped on it, gave a little push back to the upside, gaining more momentum, tapping people that was actually buying, right, taking them in, deceiving them. They bought all that they needed. Then he swept them all out and continued his direction back to the downside. So liquidity grab is way different, right? Liquidity grab kind of deceives you. So liquidity is actually not what you think. In most cases, people find it very difficult to be able to identify liquidity, in a sense that they actually have to lose money in most cases, rather than actually getting opportunity into the market to actually benefiting from it, right? So looking at this particular place, you might not be able to point out liquidity, but I will tell you that there is a lot of liquidity inside this forex market, a lot, right? Just look at this simple trending market. This created a huge liquidity. When somebody sees this, you'll be like, okay, fine. When price actually comes back here, I'm going to start buying. The moment you start buying from this particular area, it deceives you, goes a little bit up. You can see how this bullish candle rose back to the upside, right? And eventually shut down, right? So that's a liquidity grab right there. And better still, when you look around, you see that there is a whole lot of areas that had liquidity grab. So look at this particular one. So after price broke structure from here, people kind of thought, okay, fine, there is a close with a candle body, which everybody like using, even me myself. You say, oh, I have a candle body that has been broken, meaning price is trying to start switching and eventually break the swing high, which we all get wrong. Because after that particular price structure break, you can see how the candle came back with a 1 hour retrace candle, if I might say, but it's actually the daily time frame, but that's how we refer it, right? So after giving that 1 hour retrace candle, you can see what happened. Price kept on trending to the downside. But people who were still desperate, they will start buying from this particular order block, and that's where you get it wrong. You are supposed to look at the previous trending markets of that particular price structure to be able to do what, to know as to whether price is going to the downside or probably to continue to the upside as it is actually going. Right, look at this price structure. It came and created this small knot right here, which is actually a breaker block in this particular case. That's why it was able to hold this price for a very long time in a range, right? Because this was actually a change of character with a breaker block. It doesn't actually sound neat together. Let me identify a breaker block to you. If you don't understand breaker block, I have it in my videos, so I will try to link it in my description below for you to actually watch, right? So a breaker block is actually an area of resistance or support, right? Let me put it that way, because a breaker block is found before the other trending market covers it up. So this particular one can be considered as a breaker block. This candle right here can be considered as a breaker block. I have examples of breaker block in my videos below, so you can be able to check them out. Just type breaker block and you see a lot of them. I have 2 videos about it. I have breaker blocks part 2 and examples of breaker block 2 as well, so you can be able to check them out in the description below, or probably check out my videos in case I forget not to post it. So this is actually breaker block, and this is actually breaker block 2 as well. So you can see how price has held. Look at how this thing has worked so nicely, right? So you can see it happened after price, price, this is how it happens. Price comes down, it goes back up, giving you a buy to sell candle, but now presenting a candle in between those two moves, right? Then coming back to the original direction, and eventually it goes back up, right? This one was first another block, and then finally turns to a breaker block. So this one has been broken, right? So now it comes back to give you a breaker block. So in most cases, you'll be looking for an order block on this area to take this straight back to the upside. But what ends up happening is that price comes and hit the breaker block and starts exploding to the upside like fire, right? So that's what actually happens. So you can see this one does the same thing that happened right here, but the trend was so strong enough that it was able to push price back up after sweeping with this particular candle. So you can see how it struggled before pushing it down, went back to retested that particular area before shooting to the downside, and eventually where we are today, right? So you need to know breaker block often creates what we call liquidity. So it gives you a very strong range in market. So in this place, we'll say, oh, the price has broken structure, so the breaker block is going to hold. The breaker block held, holding a lot of liquidity in that particular area, deceiving people into selling their assets, and then finally it gives way for price to break through, right? Now, after price broke through, price found a very suitable order block in an area around this area, which you might not see, which is hidden unless on the lower time frames, right? So after price hit that particular order block, it now found, because it has taken a lot of liquidities that were over here. You can imagine that people that is going to be placing sell. When price comes out, they'll place another sell. Price comes out, place another sell. It's going to wake you out before going back to the downside, right? So that is exactly what happened. So now the question was, how are you able to identify break of structure or structure break versus liquidity grab? Number one, these are the tips and tricks you're supposed to look out for. Sorry for delaying this, but number one, you're supposed to look out for wicks, right? When price doesn't close with a full body candle as a break of structure, do not take that as a break of structure, right? In most cases, people use candle wicks as a break of structure. That's not wrong, but it is mostly effective on the lower time frame, not the higher time frame. The higher time frame doesn't actually give you a break of structure with candle wicks, right? Because when that does happen, it is a liquidity. Because look at it, if that does happen, look at it. This was breaking with what a break of with a candle. Why didn't it continue? It failed and it continued to trend. It happened multiple times. This happened that same way. Why didn't it continue? It swept liquidity before taking this way out. This happened the same way. It could have just tapped into another block. It continued, but it didn't. Right? That shows to you that liquidity grabs is only with what candle wicks. It wicks you out of the trade and continues in this original direction. So now you will see that in other cases there are also candle body closes, but it doesn't actually what happen. You need to look for an area of what other blocks that were not mitigated. Unmitigated other blocks also tends out to give us what false breakouts, right? So price has to break out, get more enough momentum with candles still before what gets it in to tap into. So you can see where this other block is located. Look at where it has been located from this place as compared to where this price is. Price has to tap into this before shifting down to the downside. So for you to be aware, this is actually the COVID season, and that's 2020. As you can see, that's around March, right? It is not all coincidence. Market happens for a reason. Fine, look, COVID just brought in liquidity. You can see how it pumped up and down at the same time, right? That is basically what happens, right? So this does happen. So you can even see after price slowed down for a very long time, price needs what to gain momentum. For it to gain momentum, it has to go back tapping into its original order block, right? So fine, you might say this is a break of structure. Why didn't price continue going up? On the monthly or probably weekly time frame, but rather it turned its back on us. Let's put it that way, right? And continue to the downside, breaking structure. The original structure break was this one. Why didn't price continue that way? Price has had broke structure, giving us a pure downtrend. So you have to note that price has been trending from above, not today. So you always have to look at the higher time frame narratives. You can just look at it once a week or even once a month. It doesn't actually matter. just know where you are and what you're looking out for. So hope this video actually helps. If you don't understand, please do not forget to leave a comment. Let me understand the videos you actually like to produce for you guys. Sometimes it's actually difficult to bring out video ideas to help you guys, not because I want subscribers, but I also want to help. So for me to help you, I need to know what you want. So I'll be happy if you all can actually try to always comment below to give me what you all actually want. If the video is not good enough for you, don't feel free to comment it out so that I will look for a new way to improve my video quality or probably quality of the story I'm going to bring out and how I'm going to actually speak to you through that. So thank you all for tuning in and see you in my next video. Peace out.